Hey guys, welcome back to the channel. Today is October the 20th. It is Thursday morning, and let's talk a little bit about price action trading, okay? It's how I actually trade each and every day. It's what I look for. It's what I follow in the markets, and it's what allows me to be able to see the setups, okay? Because without price movement, there would be no setups, correct? So, to all those out there, you must understand, I tell you guys this in videos time and time again, the two most important things to opening up the door and setting you in the right path of actually wanting to intraday or day trade, whatever the case is, whether you're a scalper, a swing trader, a position trader, market structure, and being able to read price action. So let's talk about that discussion right after the intro. Okay, so you want to know the biggest problem, what kind of stands in the way of people being able to actually trade? It's because they don't know how to read price action, okay? You have to be able to read every little curve and every little ebbs and flow that the market does, you know, whether it's making higher highs and higher lows or making lower lows and lower highs. You have to be able to read the swings, and you have to be able to see what areas price is taking out, pulling back to, re-breaking, retesting. You have to be able to read it all. It's just like how I talk about in the past. I say reading the market is kind of like reading a book. You know, you have to read to understand what's going on, what has already taken place and what could possibly take place. So you can't just assume and jump into a trade based on prior tense of what the market has actually done. All right, you have to be able to, especially as us as intraday and day traders, you have to be able to look at the market, understand what's taking course or what's taking, what's happening throughout a session, whatever the case is. And that's what day traders do. We sit in front of our charts. We look at, maybe prior historical events or things that have taken place based on the structure of the market. And we look or kind of want to assume what possibly may take place going forward, right? But the market is its own animal, an own beast in a sense, and it's going to do what it wants to do, okay? Because we as retail traders, I say this all the time, we are not the pushers in the market. We are not the power takers or the power movers in the market. The banks and the institutions, the market makers, we want to trade and be like them. Don't ever try to not say outthink them or outsmart them, because you, in a sense, you do, because you want to outsmart them in a sense of moving with them. So don't ever show them your card to where they can basically, run your stop and put you out of the market, whatever the case is. So you have to be smart just as well and follow their moves, okay? And their moves, if you see it, is simply price action, like playing a game of chess. They're making strategic moves in the market or whatever the case is to take your money, and then that's their goal, okay? That's how that is their goal, and to make more money. All right, so you have to be able to move with them, and all that takes place in being able to read what's going on our charts as prices moving up, down, down, up, down, up, back and forth. There are patterns that take place on our charts that we see, and visually we have to be able to read the market. So I explain it kind of like using analogies like reading a book. When you're reading, whether it's a novel or whatever it is you read that you're interested in, whatever the case is, you're reading to understand the material, okay, to absorb that material in hopes that either entertains you or is something that can help you along, if you're trying to become educated on something, whatever the case is, something that may help you in the course of trying to learn something. Same thing, price action. We are constantly trying to read what the market is doing, what is unfolding right before our eyes, and we're looking for those intricate setups to be able to get us into the market. See, the thing about what most people think in terms of price action trading, first and foremost, they think price action trading is simply, support, breaks of support and resistance. I mean, it's kind of a component in a sense of price action, which it is. But it's a whole lot more than just support and resistance, okay? Because not everybody just trades support and resistance, whatever the case is. Me, for instance, I trade supply and demand, all right? And is supply and demand an area of support and resistance? It can be considered support and resistance in a sense, but the two are or alike, but not alike in a sense, if you really think about it. I mean, because support and resistance is like trading to me. Break and retest, meaning prices made a high, pullback made a higher low, it broke through resistance, okay? So now that is a break, and you're waiting for a retest back to that area, what I call the neck of the area of resistance, which prices broke, okay? Which resistance now became a support, all right? So that's called a break and retest, and that is, you know, kind of a means of you're following price action, okay? Being able to follow the movement of what price is doing as it's breaking and creating levels of areas of support and resistance. So, is price action support and resistance trading? No, it isn't. Price action is not support and resistance. It is it's a component that makes up, or I should say, support and resistance is a component that makes up or follows suits with price action as price is moving, okay? And the second thing I want to talk about too is most people think that price action is just purely being able to, and you know, here's the next thing. A lot of people think that price action trading is just being able to trade from a purely naked chart, you know, nothing more. So they assume price action and naked charts are the same thing, you know, being able to trade from them. No, it's not. I mean, in a sense, you can, you know, the thing about it is that with naked chart trading, which I like to trade from, even though I may add, you know, I have the volume profile added to my chart, but I started when I had to go back and kind of start fresh again. I was once trading with a bunch of indicators that didn't work out for me, and then I say this all the time. It wasn't until I actually learned how to trade from a naked chart, because the naked chart cleared everything up for me. It enabled me to be able to fine tune and pay just strict attention to price movement, price action. Okay, so you know, if you're one that's watching this video today and you're a newcomer to the channel, you're a beginner trader looking to maybe possibly learn about price action and what price action really is, I highly recommend you starting from a naked chart. Again, price action is just the price patterns or price movements throughout the session, whatever the case is, or sessions, as price is moving. You know, that's all it is, making higher highs, higher lows, and lower highs. But it's in the same sense as price is moving, you know, creating price action, meaning price movements, creating levels or swings, whatever the case is, either going up or coming down. It's creating market structure as well. So that's why I always say, understand and be able to look at the total picture, meaning the market structure piece, and being able to follow price action as, you know, because once the structure is created, then you can start marking areas of, for me, supply and demand, or maybe you trade strictly off support and resistance, whatever the case is. You can start marking your levels, whatever the case is, and then following price action movements as it's returning or retracing, whatever the case may be, pullback trading or pullback, starting to pull back to certain zones or levels, okay? You follow through with price action. And once price gets to that zone or level, then you kind of determine, oh, okay, what has taken place on that move or retracement back to that area or that zone, that level, okay? You got to follow suit and be able to see every single movement, you know. With prices pulling back to an area of supply, was it breaking through structure on the means to the upside, meaning breaking levels to the upside? Because now, once price gets to an area of, say, supply above us, whatever the case is, gets to that zone or level that we're looking to possibly take a trade from, we have to look at everything below us and to the left of us to see what possibly at that point could be a stopping point for price, meaning an area of support below. And then the same thing below. If we're looking to take a trade from an area of demand below, okay, price gets to that, pulls back to an area of demand, and as it's moving back to that area of demand, retracing back to that area of demand, it could be breaking structures to the left-hand side of the chart on the way to the downside. So everything above it, when we get to that zone of demand, the level of demand, guess what? Everything above it, as prices broke structure on the means on the way to the downside, now becomes areas of resistance. Okay, so you have to be able to read and be able to kind of interpret where to take, you know, what trades to get into and which ones not to take. And you have to understand, like I always say, before you actually get into a trade, you must be able to analyze what took place with price action as it came, when it came back to those zones, those levels, you know, whether it's support and resistance, whether it's supply and demand. You know, once price gets back to those areas, you have to be able to analyze before you get into a trade. Is this a, you know, price is rejecting that area now, is this a safe place for me to actually trade? And you must know where to get in and get out. And it all surrounds being able to understand price movement, okay? That's price action, okay? So that's the thing. Like I said, most people think that, you know, price action is just trading from a naked chart. No, it does not. As a lot of people who actually become some people like to, they learn trading from a naked chart, and then they might start adding some indicators that may kind of give them an edge to trading in the market or help them out. It could be cumulative delta. Cumulative delta is the indicator, but it actually it allows you to see the aggressive orders that are coming into the market, kind of real time, like, the buy orders, sell orders, whatever the case is. So the market orders pretty much start hitting the market. I like trading with a volume profile, and the reason why I have a blank chart right now is because I'm going to show you kind of like the curation or structure of market structure, or how it actually takes place, and so you can understand, how market structure is pretty much created, and it's just created based on swings of the price moving to the upside or downside, okay? And then we'll go back, and what I want to do is follow suit and show you, like me, I trade supply and demand, and we'll take a look at kind of like price action in a sense, when it gets back to an area of demand, or as prices follow on suit, making its move to an area of supply and demand, what to kind of look for in interpreting or analyzing price action as well. So that is that in talking about trading from a naked chart. But yes, like I was saying, I use volume profile, and that is an indicator that I use because volume is very important in trading. If I could tell you if you were to ask me what is the single most important thing outside of understanding market structure and price action and being able to read and making it easy for yourself to trade from a naked chart, what indicator would I add to my chart? It would be volume profile. It would be some means of volume in a sense. Because volume is highly important. Why? Because it allows me to see areas prior to where price has built volume up, and I know that price at some point is going to come back to those areas of volume, because price, it's just like it feels comfortable there. It's like a magnet. It creates this big significant area or high volume node, whatever the case is, and price in those areas where there's a lot of volume in, a lot of transactions, a lot of orders were placed, whatever the case is, are filled, and price likes to come back to an area. It draws back to that area like a magnet at some point, okay? So, and then, I have a strategy of actually how I trade that as well, incorporating the volume profile with my when I'm trading supply and demand zones, okay, that I have marked up on my chart. So if you're looking to maybe understand the way that I actually trade here on this channel, go back to the homepage here on Future Trading with Mike. Just simply click on the little magnifying glass, type in supply and demand. I have several videos. I'm not going to say several. There's tons of information on the channel covering supply and demand, whether it's my live recorded sessions where you can actually see me actually trade through the sessions, pretty much Monday through Friday, or you can watch some of the information type videos to where I talk about certain topics surrounding supply and demand and various other topics, okay, that are related to trading, especially future trading, okay. I am a futures trader. I trade primarily the ES futures, which is the E-mini S&P 500. So anyways, getting back to what I was saying, but yes, I use the volume profile because it's important to me. All right, so let's take a look. So let's look at, like, I'm going to show you kind of how I showed this before. Let's use the arrow line. Like the market structure, okay? Market structure, like I said, is just the creation of structure as the market is, as prices is making its moves throughout a session. Pushing up, pulling back. So it's just ebbs and flows of price, either pushing higher or pushing lower to extremes, okay? And then let's say this is a high right here, which it is a high, and it may have bounced because there's some area of resistance off to the left-hand side, or price is tapped into an area of supply. Well, then price turns around. I call it pivoting. I call price at this point, I call it pivoting. And then it starts to do this pattern here. Whoops. Like this. Pulling back, pushing lower. Okay? So what it's done here is make runs to the upside, making higher highs and higher lows. Then it pivots, it hits an area structure, somewhere to the left-hand side of your chart. And I always say you have to pay attention to what's going on the left-hand side of your chart as well. You can't, even though you see the movements going on here, price action taking course, creating structure here on the chart, whatever the case is, you have to be privy to and understand what's going on to the left-hand side of your chart. So scrolling back to see if there's any areas at which when price gets to, it's going to pause at and possibly reject, and then maybe look for an opportunity to go, take a trade. But price makes higher highs and higher lows, creating structure, and then it turns around. Then price is either making higher highs and higher lows, okay, or making lower lows and lower highs. In this case here, it pivots. Now it's starting to break structure to the downside. It's broke through this area of support, okay, and it continues pulling back, pushing down, breaking more structure. And then sometimes what it will do, it may pull back significantly on a pullback, break structure here, Okay, meaning breaking through this area of resistance, and then it may continue have a continuation to where it breaks now support. So it broke structure here, it broke structure here, okay, and all this was the major pullback just to push lower to break through an area of support. So this will be market structure, but in a sum of things, it's actually price action that takes place, or price movement that creates the market structure, the structure in the market. And that's why I say you have to be able to read market structure. Market structure is like the development of price. It's like the building block, like the foundation of price is. Imagine kind of like building a house. Okay, it is the structure at hand that you actually can see being built. All right, and being able to follow what's going on as price is, building that structure. And yes, a price can throw you for a loop sometimes, like right here where I said price is moving up, making higher highs and higher lows. It breaks structure here. Okay, you would assume that it would just keep solidly pushing down, pushing forward or pushing down, just making lower lows, a low here, lower high, lower low, lower high, lower low, lower high, lower low. But what did it do? It tricked you out. It tricked you out here on this major pullback right here, just to break resistance. And that's what tricks most people up, is they think that, oh, price is broke structure now. Now we're moving to the upside. We're going to push to the upside now. And when in turn, all price did was make a major pullback, okay, break structure, and turn back around and break structure again. Setting you up for a, basically, if you know how to really trade, setting you up, if you're supply and demand style trading, say for instance, a great opportunity for a pullback to this key area right here, which would be an area of supply. So for all those that know how to trade supply and demand, you know what I'm talking about. Because price broke structure, broke through support. First of all, it broke resistance right here. Turning back around, breaks lower, breaking through support right here. So this right here would be an area of supply. As price pulls back, we'll be looking to take a trade, right? So that's price action movement being able, and what it's doing is creating areas, or creating patterns, or creating setups for traders that have the opportunity to look for entries. And that's how I trade each and every day, is trading supply and demand. But I have to be able to follow price action, all right? And I'm showing you here just a rough example of price movement, price structure. And yes, it is the goal of the market to trick traders out. This won't look as clean every single day. Some days price will just move sideways. It'll range. And those are some of the toughest days for a lot of people, when price is doing sideways. And a lot of traders will just stay out of the market. See, most traders like to see swings in the market. They like to see, oh, price making higher highs and higher lows, turning, making lower lows and lower highs, breaking structure, then pushing back to the upside. They like to see the big swings in the market, price breaking structure, because it sets them up for opportunities for trade entries. All right. So I just want to show you that quick example here, and then we'll take a look at some live examples. When I say live, I mean some historical examples of things that have already taken place, so you can see, the candles live on the chart, and showing you some zones, showing you what price action looks like as it is approached those zones. Okay, all right. And one thing I do want to clear the air about, a lot of people who don't fully know about what price action really is, or just assume, or just really haven't spent the time. Maybe you're a beginner, you're starting out, you're trying to fully understand and grasp the whole idea of price action. Yes, price action, it has many components to it. It does, and you have to go in, and I would definitely say get you a book or two, maybe a few, and actually read purely about price action. The more you read about price action, the better you're going to become with understanding price action, as well as getting your training or experience by looking at live examples on the chart. Okay, but one thing I do want to clear the air about is that some people think that price action is just or strictly pertains to one particular market, meaning the option markets, or just stocks, or the forex, whatever the case is. Like, oh, you can only trade price action on, within the option markets, or on forex, or whatever. No, it doesn't matter. Price action is universal. It's global, no matter what the market is. Okay, when I say that, it can be any particular market, stocks, options, forex, futures. It doesn't matter. Price action is what we see taking place as traders, as we're sitting during a session and following the movements of price. Okay, like I said, the structure is already there. It's being built as price is moving. That movement is price action. Okay, so price action is what is creating, the the development of structure on our charts as we see it. All right, so it is what we try to follow each and every day as traders, and you can become successful in trading just purely off of following price action if you're able to read it correctly. All right, I just want to clear that up. So price action is universal no matter what market. Okay, you know, it's what is actually creating the structure as we're sitting here watching things unfold on our charts. And it's our eyes and our perception and our skill set that allows us to be able to, you know, read the market. Okay, because without price action, you wouldn't. I promise you, if you do not understand how to read price action and what the market is trying to do, you know, and reading every little intricate move of price, whatever the case is, you have to if you want to get into trades that are going to be successful. Without doing so, you will fail. All right. So let's go ahead and look at just a few examples here. I'll show you because I trade supply and demand, but we'll use, you know, we'll be able to take a look at the movement of price or price action as price will say, for instance, returning back to an area. Okay, where and also in the same sense, you'll be able to see the structure of the market, you know, help you kind of read or understand market structure as well. All right. Now this is from October the 18th, and I'm just going to show you, okay, like I talked to you about, mentioned a few moments ago, price likes to do what? Make higher highs and higher lows, or make lower lows and lower highs. That's just, you know, that's just, price can either go up or go down, bottom line, okay? So in this example here, or a couple of examples, price is making higher highs and higher lows, okay, to the upside. It has a major pullback, which I just showing you, and the example of drawing out structure. What does it do? It has a high, it pulls back, it broke structure here, okay? But this is just a major pullback, okay? Price reverses or turns around, pivots, and breaks higher, taking out resistance right here, okay? And then it continues making these smaller, higher highs and higher lows. Now it made a high here, it pulled back, or pull back here, it made a low here, which is now support. What it did right here when it broke lower after making its high right here, it broke structure right here. Remember what I showed you a moment ago? Price is either breaking structure to the upside or breaking structure to the downside. It breaks structure right here, and at that point of the break of the structure, all we want to do is go ahead and mark an area of supply. So price action is following suit. Okay, it's making higher highs and higher lows. That is price action. Price making levels, pretty much. Okay, it is building the structure of the market. Okay, and it is our goal to understand everything in between as prices building structure and breaking structure. As to what has happened or what's going to happen, or as prices pulling back to our levels or zones, okay? Because it may not be an opportunity, a great opportunity for us to trade if price returns to a zone and then right directly beneath us we have an area of support, say for instance, okay? We have to wait for that break of support at that point. So price pushes up here and makes a high, it pushes lower, it returns back to this area here, and if we reject this area here, we do have some area at which we can actually take an opportunity to do what? To go short, because our support area is going to be down here. Now that trade, and we do, if you know how to read price action, you should know that once price gets back down to this area down here, that it's going to pause, stop, bounce, reject, whatever the case is possibly. All right. So price gets back into this area here. Once it taps into this area, I'm looking for this off a 12 range chart. I trade based on range chart. So I'm just looking for a candle break once price returns to my area of supply and demand. In this case here, this is supply. I'm looking for a candle break. Price taps into it. Once I get a break of a candle, I'll show you right here. Blow this up. Okay. So price tapped into the zone here. This is supply. What happens is I don't get a candle break yet until price breaks below right here at 73. Once price does that, I know that I may not have too much area to be able to trade from because we have support right below us. So my thing would be to scalp and try to get as much as I can out the trade, and looking for the goal. My aim would be down here to get price back down to this area here where there's liquidity at, where the support at. Price does eventually, it does come down there, but it can bounce right here as well, I know. But I do take my entry right here at 73. Once I get the break of that, taking it, and my goal is down here. So got the rejection, the break of the candle, you go short. Okay, so what I was telling you about as when price pulled back to this area here, what did it do? It broke structure right here. It broke this little level right here to the upside. So as price is broke to that area of structure below it, you know, once we get to that area, we have to be able to understand that there is support sitting right here, okay, back below us. All right, so you have to be able to gauge once price gets back to that area, meaning price movement, price action as it's pulling back are there any areas of support below us? And if so, how much space or area do we have to trade once we get the break of the candle back to the downside to try to look for profit for, or for price to fill our profit targets? Okay, so in this case here, there's not much room, but you can still trade it and get a few points out of it. Okay, some entries will kick off more points than others, but the goal is in the end to be able to read price action up to the point where price is pulling back to a level or zone, looking below you to see if you have any clearance to be able to trade that. Okay, all right, immediately. If not, then you wait for price to continue making its move to the downside, breaking structure, breaking through areas, looking for a pullback, and then maybe continuation to go short. All right. Here's another example right here I show you. So once price tapped in here, it continued making lower lows and lower highs, breaking areas of structure to the left-hand side of the chart. All right, so it pushed down, pull back, push down, pull back, push down, and then it pulled back. All right. So now as price was breaking lower, it broke structure here, it broke structure here. Push down, made a low here, lower high, lower low, broke structure right here, pulls back. Now you have an area of demand, supply sitting right here up in this area here. Why? Because the swing to the downside, price action following suit, making lower lows and lower highs, it pulled back to this zone here. This swing here to the downside took out structure over here, to the left-hand side of the chart. That's why I said you have to look to the left-hand side of your chart to look to see price movement, price action, what it did, how was it, what did it do as it was following suit? Okay, so it broke structure here to the downside, took out support, pulls back. Now this area here becomes supply. Once it returns to this area of supply, we're looking for what? Because I'm a supply and demand style trader, I'm looking for a quick entry to go short with the break of a candle to the downside. The break of a candle means either the break of the body of the previous or last candle to the upside, since we're trading an area of supply. Okay, so price broke lower with this red candle breaking below the body of this last green candle to the upside. Once I get that, then I'm looking to take the trade back down and to the area of support right here, this low right here. There's liquidity resting right there, and price does exactly that. It comes down, pulls back, area of supply, look for the rejection with the candle break, back down to this area of support right here. So that's price action. Price action, pulling back, making a high here, higher low, higher high. Okay, the only area of support below us, in which we can aim for, and the only area of support that may stop or pause, cause price to pause, or possibly even reject, is this area of support below us. Okay, so once price breaks that candle to the downside, we look to aim for that area, okay, below us. Now sometimes price will, in this instance right here, as it returned, it broke structure, meaning it took it out this little swing here to the upside. So you have to count that as well, because once price rejects this area, it could come down here and pause right here, okay, because there's an area, possible area, there's support sitting in this area here. So price could pause there and then reject and then continue pushing higher. All right, so we look for price to take this area here, continue pushing lower, taking out this area for it to push lower. Okay, so let's see if we can find an area of demand now. Okay, so now we see price continues making lower lows and lower highs. This is price action movement. Okay, that's all the price action is the ebbs and flows, the swings of price as it is, building structure in the market or whatever the case is, and it's also the movement back to an area on which you may mark the zone from. So you have to pay attention to everything that happens in between where price, say for instance, makes a low, and then above you may have, look if you marked off an area of supply, and price is pulling back to the area of supply. What did it do on its way back to the upside? Following price action, did it also break through areas of structure moving back to the upside? Okay, as an example. So price made a low here, lower high, breaks lower. It bounces off of some area of resistance or supply, or demand to the left-hand side. Not supply. Either demand or support off to the left-hand side. This is demand sitting right here. Okay, but either way, what I'm trying to show you is an example of demand. Okay, on a setup. So price makes a low right here. It breaks higher, takes out these swings. Again, remember what I said? Price made making a low, and what's it doing? And now it's making new structure to the upside, pushing up, pulling back, breaking higher, breaking structure. Price action, price movement, breaking structure to the upside. Now what does it do? Okay, so once it breaks structure, I said this in so many videos, go ahead and mark your area of demand. Once it breaks structure to the upside, you have demand below you. You mark that area there. You wait for the return of price back to that area. And on the return, you have to follow price movement or price action down to the downside, back to this area of demand. It makes a low, it pulls back, makes a lower high, makes a lower low. What do you see it do? It breaks structure now. So now we have resistance right above us. Now it's kind of questionable. Okay, so what could possibly happen once price gets back to this area of demand? We may not have an area where we could actually get into the trade for, you know, I should say a decent trade, because price could bounce right at this area of resistance. All right, we get to the trade right here, we have resistance right above us. Okay, why? Because when price made this low here, okay, made this low here, pulled back, it broke lower, it took out resistance right here. So support right here, not resistance, took out support right here. So once price gets to the demand zone, right above us, we have now resistance. What was once support will now become resistance. All right, okay, an area where price could actually pause and reject, or whatever the case is. All right, so you have to understand and follow price action as it is coming or returning back to key areas of supply and demand, support and resistance, whatever the zone or level is you're marking. Okay, and let's see, maybe we'll get one more example here I can show you. Okay, here's an example right here. Okay, so we have this swing to the downside right here. There's a low here. Price pulls back, makes a high here, but it then kind of makes a lower low here. So it's a big swing to the downside. Then you get price movement, price action, back to the upside. Make it high, higher low, high, higher low, high, higher low. It breaks this area of resistance, which is it breaks structure, okay? So that's price action movement, making these ebbs and flows, making these swings to the upside. It pivots, hits an area of maybe resistance or supply to the left-hand side of our chart. Either way, it pivots, turns back around, price action movement back to the downside. But once price breaks in the area of, say, for the structure right here, what do we immediately do? We look to mark areas of demand. Okay, and I say this: when price breaks structure, look to mark your area of support, of supply or demand. In this case here, we broke structure to the upside, which means we broke resistance. We break resistance, mark your areas of supply. We break support, mark your areas of demand. Okay, I'm sorry, opposite, totally. Please disregard that. What I meant to say was, if price is breaking structure to the upside, okay, and it's breaking through an area of resistance, mark your areas of demand, all right? If it's moving lower, breaking through areas of support, then mark your areas of supply, okay? All right, so it broke resistance right here, okay? So we mark our area of demand, okay? There could be an area here, in here, back down here. I marked this one here because price, I was looking for price to come back to this area here, and which it did. All right, so when price returns back to this area, okay, price action, back to the area, movement to the downside, making lower lows and lower highs, what does it do? It taps into it, okay, right here. It did tap into it right here. So if you took this entry right here, you could enter here at the break of this candle, this green candle, above the body of this red candle, take it back at this little high right here. It gives you a second opportunity as well when price just comes a little lower into the zone. So there was one opportunity, two opportunities, same thing. Break of a candle to the upside above the body of the red candle, take it back to the high right here where this liquidity is sitting at, meaning the top end of this swing. The last swing to the downside, take it back up to the high right there, all right? So I've shown you several examples of, being able to kind of understand market structure, but as well understanding what price action really is and how to actually use it in your trading each and every day. It's just a way to be able to read what the market is trying to do and analyzing it as prices returning back to zones or levels that you are interested in trading. That's all I have for you guys in this video today. It was a little bit more lengthy, but I kind of want to be more in detail about how I use price action in my own trading. If you're trading, please be safe in the market. If you're interested in joining our Discord community, where we have probably over 500 community members now, to where we talk about the future markets, primarily the MES, the micro ES, or the mini S&P 500. Most of us trade that, but the strategy that I use, you can trade across any market, okay? It doesn't just matter if you trade futures only. So if you're looking for a good wholesome group to join, to where we come together each and every day, there's a channel on there. There's a couple of channels, but one specifically where it's called the trading floor, where we share information or zones or levels. People give tips and hints about the market. I'm on there engaging just as well with the traders each and every day. It's just we come together collectively talking about the markets and sharing of information. So if you're interested in joining, find the link down in the description portion of this video below and join the community today. It's free of charge. I'll show you what it looks like right now. Okay, this is our Discord community, guys. Okay, right here. I mean, we have people you can see, you can join. There's a couple of channels we have set up. We have the trading floor, which we primarily use to talk about the market or during the session, and then the general chat where traders come together and talk about various things outside of the session. It could be about strategies they may use, or question and answer in type form, where you may have a question and someone can provide an answer. If it's not me, someone else can. But I mean, we have various channels set up. But primarily, if you're looking to engage in the conversation surrounding zones and levels of interest that traders are looking to trade from, giving pointers out, come and join us today. You can join the free of charge. Find the link down in the description portion of the video below and join us today. You'll get a welcome. I guess a little welcome announcement, whatever the case is, once you click on it, letting you know about the channels you can join, whatever the case is. But we're here. Click on it and join us today, free of charge. Take care, guys. I'll see you in the next one for trading. Please be safe in the market.